Yo, what's up you guys? Welcome back to another video. Today we are going to take a look at the market from both a technical and a fundamental perspective. So without any further ado, let's get straight into it. Now before we get there, we are going to talk about some of the news events that is taking place next week. And first we're going to look at the news that came through last week, which was CPI that came through higher as anticipated month over month. And then we had some retail sales came through negative, unemployment claims, core PPI and CPI. All of these data that got released, again, giving us the indication that we can expect the index to still continue. As long as inflation continues to increase, the expectation that the Feds are going to hike interest rates will always be there, because the Feds can't lower the interest rates at the moment, right? Now, going into next week, Monday, we have the member Barkin that is addressing the nation. And then on Tuesday, we have the US CPI coming through there as well. And I just need to make sure that, let's go. Yeah, so we've got the FOMC meeting minutes. I'm not sure why this thing is saying CPI over here, because this is Tuesday. Okay, no, that was for last week. We have to look for the upcoming week. Sorry about that. So we've got tomorrow is a public holiday. Sorry, on Monday is a public holiday. Tuesday, nothing. Wednesday, FOMC meeting minutes, which is February the 21st, which is right around there at 9. And then we also have on Thursday, we do have a weekly some jobless claims, but it's not as high impact news as the ones we normally look forward to, right? So like I've said before, I do expect the dollar to continue bullish, and that's kind of where the expectations are going to stand, right? Firstly, on the weekly time frame, we can see we are currently trading still in bearish territory. The market had broken below this level of support, came back, tested it as resistance, didn't hold, went up, came back, tested that level of resistance as support, continued higher. With the market now faced new support as resistance, broke above resistance, and it's now trading at support there as well. Now, going into next week, I do expect the market to still continue higher. We can see here that the market did break and closed. That candle closed above this previous level of resistance that acted as a level of support there as well. But I would be very nice to see what kind of price action we have on the daily time frame, right? Now, if we go down on the daily time frame, what do we have? We can see here the market is still trading at this level over here. Now, this level here acted as a level of resistance. Market broke above that, broke below support, back to tested as resistance, broke above resistance, and now back to tested as support. So from here, we definitely expect a continuation to the upside. As you can see, we have an impulse after an impulse. We got the correction, and if you take the Fibonacci from the low to the high, we have a pullback that just broke below the 61.8. But we do have the possibility of this level of resistance over here that the market had broken above, came back, tested it as support. And if you take the Fibonacci from the low to the high over there, we could potentially see the market continue higher to that level over there, which is the first take profit level. So I will continue to be looking for some bullish continuation on the index. As I've said for the last 5 weeks now, I'm still bullish on the index until the CPI data shows something else, right? Now, this is a trade. Okay, so this is this is gold. So the next time we are going to take a look at is gold. Let me just remove this trade quickly. There we go. So we can see a gold had broken below very strong support over here. There is definitely a continuation expected. So as you guys can see over here, this buy that I took, the take profit is located at this level over here, right? This previous level of support that is now acting as a level of resistance. Going into the new week, I do expect the market to continue higher. From there, I'll just give you guys another update on there as well. Next up, we've got the NASDAQ. The NASDAQ 100 still trading in bullish territory, as you can see over here. We broke above this level of resistance, tested it as support. Now, again, the market will continue lower all the way till potentially till there. From there, we need to see if we get a clear daily close and break and close below that level before potentially start looking for any other movements in there as well. Guys, it's important that you keep in mind that when you enter the market, or when I enter the market, I enter the market the same way as I would look at the structure, right? I'll always wait for confirmation in the market there as well. Next up, we've got the Dow Jones. The Dow Jones over here, we can see the market is about to break, had broken below this level over here. This level acted as a level of support, broke below that, tested it as resistance, broke above the resistance, printed an equal high. Normally, what you get in a situation like this is what's known as an inverted head and shoulders pattern that we could potentially see this market does create over here, because we have an equal high. Firstly, we have a left shoulder, we've got a head over here. So depending on if we do get a the next candle prints green and we go up, then we can expect to go higher. What I would wait for if I had to be looking for any selling opportunities over here is to wait for the next candle to close, and then on that would be acting as a level of support. Once that level of support gets broken, it becomes resistance, and from there I'd be starting to look for some selling opportunities in that way. And then, like I said before, the way I would enter is the same way as I would look for structure in the market. Next up, we've got the German 30 that finally broke above this level of resistance over here. We can see how beautiful the price action had played out on this market over here. And this is what I normally am referring to. You just need to understand the overall direction of the market, and then from there you can make a decision. But we do have an impulse, right? And we are expecting a correction to at least the 0.382. So going into the new week, I probably expect us to go a little bit deeper before continuing higher there first. That is it from my side. Let me know what you have in your watch list for this week. Thank you for your time, and as always, cheers for yours.